So let me tell you a story about a bank trying to make things crypto-friendly for all of us. So now imagine you're a traditional bank. You hear about Web3, you hear about blockchain, you hear about crypto and all that good stuff. And then you decide, hey, let's start servicing this group of companies and then we can make some money out of that. So now, you as the bank start providing traditional banking services to crypto exchanges like Coinbase, Crypto.com, Paxos, and Gemini. And by doing so, these gave you a revenue growth from $80 million in 2018 to $176 million in 2021, which was great for shareholders and investors because you've just proven that TradFi can support crypto in their businesses as well.
Hand in hand we live together.
But then when FTX imploded, being the largest customers that you have, this rocked the ship a little bit and other crypto exchanges started withdrawing out all their money from the bank accounts, which saw a loss of $1 billion by the end of 2022. And now, your bank is sitting on a negative $8 billion in deposits. So the bank in this story is none other than Silvergate Bank. So if you have used crypto exchanges like Coinbase, or even services from Circle, Paxos, Crypto.com, Gemini, Bitstamp, you would have probably used Silvergate Bank, which will be closing down its operations after failing to repay debts that they have incurred amidst the crypto meltdown.
What meltdown, Ken?
So Silvergate Bank is a California-based community bank that started business in the 1990s, and they pivoted to offering banking services for crypto companies, particularly exchanges, after it bought over DM Assets, which was the company that was working with Meta to create their own form of token called Libra. But the Libra token didn't take off and it's kind of slowly just died away. So Silvergate Bank was probably the first crypto-friendly bank, and it climbed to fame because of their willingness to accept deposits from crypto companies, and it became an essential role in the whole crypto ecosystem. So part of the offerings on Silvergate is SEN, or Silvergate Exchange Network. So SEN is an instant payments platform that allows Silvergate clients to send USD to any Silvergate accounts outside of the regular banking hours that many banks didn't offer, which many exchanges love because people appreciate fast and quick settlements.
I like fast everything.
So everything was going very well for Silvergate and there were very little competition in this space, which means good money for them. So although the bank didn't deal with any cryptocurrencies directly, because most of their deposits or withdrawal was serviced in fiat currencies, and many of its clients were crypto exchanges dealing with cryptocurrencies, and one of the largest one is none other than FTX. So by the end of Q4 in 2022, when the world saw the implosion of FTX, Silvergate's biggest client, this resulted in crypto exchanges users losing confidence in the crypto space. They started selling crypto, they started withdrawing fiat from the exchanges, and in turn, these exchanges withdrew the funds from Silvergate. So although the company survived FTX implosions financially, they were forced to cut headcounts by 40%. So to help you understand a little bit more about Silvergate, they had $13.9 billion by the end of September 2022. So in Q4, when crypto took a huge hit and customers started withdrawing funds, Silvergate ended 2022 with only $13.9 billion in deposits. So this brings the next problem. Since they were short of $8 billion in deposits, there were only two ways to raise funds, which were one, to take a loan, and number two, to sell existing investments to raise funds in the short term. So what Silvergate went on to do was to take a $4.3 billion loan from FHLB, or the Federal Home Loan Bank. So Federal Home Loan Bank is a government-sponsored bank that helps banks that require sudden cash flow. So the next thing they did after the loan was to sell their portfolio of bonds to gain access to liquidity for the short term. So Silvergate had $11.4 billion in bonds, and of that, $8.3 billion of bonds were available for sale, which means that the bond didn't have to be held to maturity and can be sold there and then. And the remaining $3.1 billion of bonds are the hold to maturity bonds, which cannot be sold and only redeemed when it matures. So the bonds that were held to maturity were basically untouchable and is valued at their cost price. However, the available for sale bond had to be priced at the current market value and not the price that it was purchased at. So at the current market value, the price of Silvergate's $11.4 billion bond portfolio was only valued at $5.7 billion, which means that Silvergate will have to realize its losses to raise funds. So this whole saga just shows a little bit of bad risk management and leveraging on too many short-term volatile bonds, which cause illiquidity within the bank. So what is in for us right now, or what's the situation for us right now in the crypto space? So after the FTX saga, anti-crypto regulators have been scrutinizing the crypto space a lot, and with this Silvergate saga adding oil to the fire, and senators questioning if Silvergate was involved in moving fraudulent funds from FTX to Alameda. So moving forward, I feel that there will be more regulations set in place, and potentially we might see stablecoins becoming more widely accepted, or there might be an increase in adoption if there is lesser channels for us to off-ramp our digital assets. So there might come one day when we can start paying with stablecoins for coffees, for lunch, or maybe even phone bills. So this brings us to the end of today's video. Let me know what your thoughts about Silvergates are, and as always, stay safe, invest safe, and I'll see you guys in the next one.